Have you ever wondered about the future of AI investments? The landscape of artificial intelligence investments has been nothing short of a roller coaster ride, evolving dynamically with every passing year. Let's take a moment to look at some recent developments. DeepMind Technologies, an AI firm owned by Alphabet Inc., made headlines when it closed its office in Edmonton, Canada. This move, driven by the resource intensiveness of operating the firm's only international site, came on the heels of Alphabet announcing layoffs of 12,000 employees. But what does this mean for the future of AI investments? Venture capitalist Alan Patricof, known for his investments in Apple and Venmo, raises a cautionary flag. He warns of a potential AI bubble, suggesting that many companies are diving headfirst into AI without fully understanding how to wield it effectively. However, every coin has two sides. Retired Wharton professor Jeremy Siegel and Dan Raju, CEO of Tradier, offer a counter-perspective. They argue that the current wave of AI adoption is not a bubble, but a realization of AI's tangible benefits by companies across various sectors. This debate reflects the complex and ever-changing nature of AI investments. As AI technologies continue to permeate across industries, companies are compelled to invest in AI to stay competitive. Savita Subramanian, head of U.S. equity and quantitative strategy at Bank of America, believes that this trend is not just a tech story, but a long-term theme that will shape investments across industries. As we delve deeper into the topic, remember, the future is not set in stone, it's shaped by our actions today. In 2023, the landscape of AI investments has seen some fascinating trends. Let's dive into some numbers to get a clearer picture. The volume of investments in AI this year has skyrocketed compared to previous years. This surge can be attributed to the increased belief in AI's transformative potential. In fact, it's been a year of significant highs, especially for AI-related stocks. Savita Subramanian of Bank of America noted a rally in these stocks that she described as not entirely rational but indicative of a strong underlying theme for the long run. The excitement over AI technologies has had a rippling effect on major indices too. The S&P 500 and the Nasdaq 100, two of the most significant benchmarks for U.S. equities, have registered impressive climbs, 14%, and a whopping 37% respectively. These increases are driven by investor enthusiasm over AI technologies and expectations of the Federal Reserve ending its aggressive interest rate hikes. But it's not just about the tech sector. The AI theme permeates various industries, making it a broader narrative that extends beyond just a tech story. Companies across the spectrum are realizing that investing in AI is no longer an option but a necessity to stay competitive. However, amidst this excitement, it's essential to remember that not all that glitters is gold. Some industry veterans like Alan Patricof caution against a potential AI bubble, warning that companies rushing into AI without a full understanding may face financial struggles in the future. Despite these concerns, the general consensus remains optimistic. AI is seen as part of a larger trend of efficiency, automation, and doing more with less, which many believe will be bullish for corporate margins. Investments in AI are not just numbers. They reflect our collective belief in the power of technology to shape our future. AI is not confined to the tech industry. It permeates every sector, transforming how we live and work. It's the invisible force behind the scenes, making our lives more efficient, our work more productive, and our world more connected. The year 2023 has seen a flurry of investments in artificial intelligence, with certain sectors seemingly attracting more attention than others. Let's delve into some of these sectors, shall we? First up, we have the healthcare sector. The potential for AI in healthcare is immense, from predicting disease outbreaks to improving patient care. It's no wonder that investors are keen to fund AI-driven healthcare startups. We're talking about AI being used to analyze patient data, predict disease progression, and even assist in complex surgeries. It's like having a super smart doctor who never sleeps. Next, the finance sector is also a major player in the AI investment game. AI is being used to make smarter investment decisions, detect fraudulent activities, and provide personalized customer service. Think of it as your personal financial advisor, only it's available 24/7 and can crunch numbers faster than you can blink. The transportation sector, too, is seeing a surge in AI investments. From self-driving cars to intelligent traffic management systems, AI is revolutionizing the way we move around. It's like having a personal chauffeur who knows the best routes and never gets tired. And let's not forget the retail sector. AI is being used to personalize shopping experiences, predict consumer behavior, and manage inventory. Imagine walking into a store that knows exactly what you want, even before you do. These are just a few of the sectors attracting AI investments. But remember, as Savita Subramanian, head of U.S. Equity and Quantitative Strategy at Bank of America, points out, AI is not just a tech story, it's a broader theme of efficiency and automation across industries. As AI continues to evolve, so too will the sectors it influences, leading to a future that's as exciting as it is unpredictable. So brace yourselves, because this AI-driven future is not just coming, it's already here. Every investment comes with its share of risks and rewards. But with AI, the stakes seem higher. In the race to capitalize on the potential of artificial intelligence, many companies are leaping headfirst into the fray. However, this rush could lead to a potential AI bubble. Venture capitalists like Alan Patricof warn of this possibility, reminding us of the dot-com bubble of the late 90s. Companies are investing in AI without fully understanding how to use it effectively, leaving them vulnerable to financial struggles down the line. This pattern is reminiscent of the dot-com era, when companies rushed to establish an online presence without a clear plan. Even tech giants are not immune to these risks. Take Alphabet's AI firm DeepMind, for example. Despite Google's acquisition giving it a leg up in the AI race, competition from Microsoft-backed OpenAI and other players has increased. The closure of DeepMind's office in Edmonton, Canada, and Alphabet's announcement of significant layoffs show that even the big players can face challenges in this complex arena. But let's not forget that every coin has two sides. With risks come potential rewards. The AI market is far from being a monolith. It's a diverse ecosystem with plenty of room for growth and innovation. Companies are beginning to realize the benefits of AI, and this realization is not confined to the tech sector alone. AI is becoming a broader theme across various industries, with companies investing in it to stay competitive. Bank of America's Savita Subramanian sees AI as part of a larger trend of efficiency, automation, and doing more with less. This trend, she believes, will be bullish for corporate margins in the long run. Despite warnings of an impending recession, investor excitement over AI technologies and the expectation of the Federal Reserve ending its aggressive interest rate hikes have driven a surge in the S&P 500 and the Nasdaq 100 in 2023. So, while the risks are real, the rewards can be significant for those who navigate the AI investment landscape with caution and understanding. As is often the case in the world of investments, it's not just about being bold and taking risks. It's also about being patient and wise, understanding the nuances of the market, and making informed decisions. In the world of AI investments, fortune favors the bold, but wisdom rewards the patient. You might be wondering, where do I fit in this AI investment journey? That's a great question, and we're here to guide you through it. You see, the world of AI investment is not just for venture capitalists or tech gurus. It's a rapidly expanding field that touches every industry and has the potential to impact every consumer. So whether you're considering dipping your toes in as an individual investor, or you're simply curious about how AI-driven products and services will affect your life, there's a place for you in this journey. First and foremost, educating yourself is key. Understand what AI is, and its potential impact on various industries. There's a wealth of information out there, from articles and reports to online courses and webinars. And don't be afraid to ask questions. The more you know, the better equipped you'll be to navigate the AI investment landscape. Next, consider how you can get involved. If you're an individual investor, start small. Look for companies that are integrating AI in innovative ways and consider investing in them. Remember, investing is not without risks. So, do your research, consult with professionals, and always diversify your portfolio. On the other hand, as a consumer, you can support AI-driven products and services. Use them, give feedback, and help these companies improve. Your role as a consumer is vital in shaping the future of AI. And finally, stay updated. The world of AI investments is dynamic and ever-changing. New advancements, opportunities, and risks are always on the horizon, so make it a habit to stay informed. As we continue to explore the world of AI investments, remember, your role in shaping the future of AI is just as important. And to stay updated on AI investments, don't forget to subscribe to our channel.